Next schedule is schedule number 8. Investment shareholders. Short-term investments. First one, government securities and government guaranteed bonds including treasury bills. Second one, other approved securities. Third one, other investments. So under other investments, first one, shares. Shares may be of two types. First one, equity shares. Second one, preference shares. Then mutual funds. Then derivative instruments. Then debentures or bonds. Others must be specified here. Subsidiaries, investment properties, that means real estate, investment in infrastructure and social sector, other than approved investments, then take total. Investments in India, outside India, then total. Schedule number 8A. Investments policyholders. The same items repeat. Long-term investments, government securities and government guarantee including treasury bills, other approved securities, other investments, shares, equity, preference, mutual funds, derivative instruments, debentures and bonds, other securities to be specified, subsidiaries, investment properties, real estate, investment in infrastructure and social sector, other than approved investments, then short-term investments, government securities and government guaranteed bonds including treasury bills, other approved securities, other investments, then shares, equity shares, preference shares, mutual funds, derivative instruments, debentures and bonds, other securities, subsidiaries, investment properties, real estate, investment in infrastructure and social sector, other than approved investments, total, investments in India, outside India, then total. Then 8B. Assets held to cover linking liabilities. Assets held to cover linking liabilities. The same items repeat. Long-term investments, government securities and government guarantee including treasury bills, other approved securities, other investments, under other investments, shares, under shares, equity, preference, then mutual funds, derivative instruments, debentures and bonds, other securities, subsidiaries, investment properties, investment in infrastructure and social sector, other than approved investments, short-term investments, government securities and government guaranteed bonds including treasury bills, other approved securities, other investments, shares, equity, preference, then mutual funds, derivative instruments, debentures and bonds, other securities, subsidiaries, investment properties, investment in infrastructure and social sector, other than approved investments, total. and total divided into 2. Investments in India, outside India. Then take the total. Schedule number 9. Security wise classification. First, secured. On mortgage of property. So, security wise classification, secured, unsecured like. First, secured. Secured on mortgage of property. In India, outside India. Secured on shares, bonds, government securities, etc. Others to be specified. Then unsecured. Loans against policies. Others to be specified here. Then take the total. Schedule number 9 continues. Second one, borrower wise classification. Central and state governments, banks and financial institutions, subsidiaries, companies, loans against policies, others to be specified. Total. Who borrowed money from the insurance company? Central government and state government, banks and financial institutions, subsidiaries, companies, loans against policies, others. Schedule 9 continues. Performance wise classification. Loans classified as standards. Loans classified as standard. In India, outside India. Non-standard loans, less provisions. In India, outside India. Total. Maturity wise classification. Short term, then long term, then total. Schedule number 10, fixed assets. So, 4 columns are the particulars, cost or gross block, depreciation, the net block. Then cost or block divided into 4, opening, additions, deductions, closing. Opening value plus purchased during the year minus deductions during the year. After making all these deductions, we will get closing balance. Depreciation up to last year. Up to last year depreciation. For the year, that means current year depreciation. On sales or adjustments, then to date. Okay. Up to the last year, for the year, on sale or adjustment, then to date, up to this date. Net block, as at year end, then previous year. Current year net block as well as previous year net block. Then what are the items? Fixed assets, goodwill, intangibles, other intangible assets specify. Land, freehold, leasehold property, buildings, furniture and fittings, information technology, equipment, vehicles, office equipment, others. Then take the total. Schedule number 11, cash and bank balances. First one, cash, including checks, drafts and stamps. Bank balances, deposit accounts, short term, due within 12 months of the date of balance sheet. Others, current accounts, others to be specified. Schedule number 11 continues. Money at call and short notice. Classified into 2 with banks, with other institutions. Then total. Balance with non-scheduled banks included in second and third above. Balance with non-scheduled banks included in second and 3 above. Cash and bank balances. in India, outside India. Then total. Schedule number 12, advances and other assets. Advances. Reserve deposits with seeding companies. Advances to seeding companies. Application money for investments. Prepayments. Advances to officers, directors. Advance tax paid and tax deducted at source. Advance tax paid and taxes deducted at source. Others. Then take the total. Schedule number 12 continues. Other assets. Income accrued on investments. Accrued income. Outstanding premiums. Agents' balances. Foreign agencies' balances. Due from other entities carrying on insurance business. Due from subsidiaries or holding company. Schedule number 12 continues. Seventh one, reinsurance claim, balances receivable. Deposits with Reserve Bank of India. Others to be specified. Total, then grand total. Schedule number 13. Current liabilities. Current liabilities. Agents' balances. Balance due to other insurance company. Advances from treaty companies. Deposits held on reinsurance ceded. Premiums received in advance. Sundry creditors. Due to subsidiaries or holding company. Claims outstanding. Annuities due. Due to officer or bar directors. Others to be specified. Then take total. Schedule number 14, provisions. First one, provision for taxation. Less payments and taxes directed at the source. For taxation, deduct payments already made by the insurance company and tax deducted at source. Then for proposed dividend, provision for proposed dividend. Provision for dividend distribution tax. Any other provisions to be specified here. Then take the total. Schedule number 15. Miscellaneous expenditure. First one, discount allowed in issue of shares or debentures. Discount on issue of shares or debentures. Any other miscellaneous expenses to be specified here. Okay, thank you.